Morning and good afternoon, everybody. Very warm welcome to the third day of Mastercard EEMEA Crypto Week. My name is Andrea Prazakova. Some of you already know me because you joined us on Monday and Tuesday. I lead Mastercard Foundry for EEMEA, and I am your MC for today and for tomorrow. In the last 2 days, we demystified NFTs and also explored DeFi. One of the topics yesterday in the discussion was traceability, transparency, which really fits perfectly and segues into today's theme. Because today we will not only debate with our experts how to enable safe and compliant crypto payments while using CipherTrace, but also we will show you a real transaction tracing. And I think that's the exciting part. I feel it's almost like, blockbuster movie when Tom Cruise is chasing some villains. So we will show you something similar. Of course, without Tom Cruise. It really brings a situation to my head, which I lived through last week with my son. If you joined us on Monday, you might remember I mentioned that my 11-year-old just created his 2 NFT collection, one 1,000 and second 5,000. So last week, he comes and asks me to transfer some Polygon into his MetaMask wallet. So he can mint his NFTs and post the collection in OpenSea instead of uploading one by one, which is really difficult. So I went into my crypto.com wallet, created Dante as my wallet beneficiary. Note that there is also a cooling period similar to banking, about 24 hours. And then later, I sent him the coins. But the coins didn't arrive. So obviously, he started to panic, was saying, you lost the money, we can never find it. So we contacted crypto.com and they said it will take a couple of hours, and then next day still nothing. We couldn't see the transaction detail in the wallet, so requested crypto.com to share this with us. And what happened? Voila, we got a link with full visible and published transaction. It's really like a public record showing complete details of a transaction on the Kronos network. So the real beauty of the blockchain is that it's super visible, and yesterday Ashok and Kamran spoke about it quite heavily. It's visible to everybody, it's transparent, and it's traceable. And I'm really excited with that to segue into introduction of our today's panelists. So let me introduce to you Shahin from Dubai. Shahin is our Vice President for Cyber and Intelligence Unit. He's looking after emerging technology and platforms such as digital identity, behavior biometrics, AI, and crypto risk. All this with a focus of security and risk mitigation without compromising actually the customer experience. Mastercard has made several acquisitions in this space over the recent past, and Shahin's team is responsible for scaling these technologies into EMEA region. And I also know some fun facts about Shahin. He is an avid pizza baker, and I think he's, trying to figure out if he should, explore his skill into a physical world, and after he listened to the guys on Monday, if he should just start mint the pizzas in metaverse. So I'm not sure, Shahin, where you're going, but great to have you with us. From London, Siobhan, great to have you in Dubai, even only virtually. Siobhan is a sales director for CipherTrace, Mastercard latest acquisition, which has substantially expanded our crypto risk offering to our partners. Siobhan has built her career on venture building cutting-edge technology, most recently establishing the APEC division for machine learning world leader Featurespace, which is really interesting. But also one fun fact about Siobhan, she has a huge passion for environment and technology. So she most recently invested into NFTs of non-fungible trees. And that's actually the first time I hear about non-fungible trees. I think we need to hear about that a little bit more. So as we see crypto transactions soar, she is really here to help clients strike for optimum balance between the risk and reward. And lastly, the audience who joined us Monday or Tuesday already know Kamran really well. Kamran is our blockchain and digital asset guru based here out of Dubai. He always says that he wants to use the blockchain power and to bring innovation to payments industry. He leads multiple regional initiatives, including crypto card program, crypto acceptance, DeFi, central bank digital currencies, which we will be speaking about tomorrow. So he really lives and breathes crypto and NFTs. And in his free time, he's constantly hunting the next board API Yacht Club NFT projects. Kamran is also a person I personally always call if I need anything related to crypto. I'm just expecting him to issue a NFT invoice and in some coins, which I will need to settle from there. So great welcome, Shahin, Jean, and Kamran. Great to have you. Let me start with Shahin with the first question to you. If we put some context and the landscape overview, crypto is generally seen as risky, having legal aspects. Shahin, can you give us some insight about the global crypto risk landscape?
Yeah, sure. So that's perfectly understandable. So let's face it, when we talk about cryptocurrency, it's a term that's synonymous with the dark web, terrorist financing, and ransomware. But typically what we're finding is that it's largely a 1% problem where actually 99% of the transactions aren't actually illicit. But what's then kind of adds more complexity is that ultimately the cryptocurrency market, as I'm sure you guys have learned over the past 2 days, is growing at an astounding rate. So at the moment, it's estimated at $2 trillion market cap, which in comparison to the global e-commerce market is valued at about $9 trillion. So what we're seeing is kind of this really interesting, fascinating kind of confluence of events where you're seeing more customers piling and putting their money with cryptocurrency, but equally we're seeing massive increases in things like cybercrime. So in the past year, we've seen the number of ransomware attacks actually quintuple globally. And actually, crypto is the main kind of form of payment. Adding more complexity, as we all know, is this war going on in Ukraine. Every week we're seeing updates of sanctions list. And so really it's putting a lot of pressure on compliance teams and banks to stay on top of cryptocurrency in this new kind of dynamic market that we're seeing.
Amazing. Jean, how about EEMEA? Bring it home to us a little bit. How are our customers reacting to to fast growing crypto volumes?
Sure. So let me try to answer this from our customers' perspective, right? Maybe throwing some numbers. I think other than how our customers are reacting to it from a Mastercard branded cards perspective, it's important to know how fast this is growing as well, right? Globally, just to throw some numbers, what we have seen between 20 and 21, in terms of dollar value, we have seen about 900% growth on crypto transactions, right? And specifically for our region, for Eastern Europe, Middle East, Africa, this is even more. This is more than 1,000%, which is like 10 times more. And this is close to $3 billion, right? So what we're talking about is about $3 billion volume. Majority of this, of course, is towards the second end of half of 2021. So this is continuously growing at a super fast pace. Now, the way issuers are reacting, banks are reacting to this is on average across our region, banks are approving only about 45 to 50% of these transactions, right? 50% of the dollar value, 45% of transactions. Now, the approval rate, but there's a big range there, right? We see customers approving about 4 to 5%, right? Even if there's no regulation in the market. And we see customers who are approving about 75, 80% of these transactions. So it's a very big range. And what's interesting here is, on average is 45%. This is almost half, right? A little bit, maybe more than half of regular e-commerce transactions, right? So there's a big gap between how issuers treat e-commerce transactions and crypto transactions.
Right.
But then we can't also deny the fraud aspect, right? So we see about 4 times more fraud on crypto transactions. But definitely, we always say as CNI, if you want zero fraud, there's a very simple solution. If you want zero fraud, you can decline just everything, right? Decline everything and you will have zero fraud, but then you will also have zero customers. So declining everything is definitely not the answer here. So maybe in terms of all, from your perspective, I can highlight 3 things. Number one, if you look at the growth, right? Cardholder and consumers, they will get involved with crypto one way or another, right? So that growth is going to happen. Number two, issuers perceive and treat crypto transactions differently. Approval rates differ a lot, right? Most issuers perceive them as risky, but not all of them, right? And number three, there is a clear opportunity here, right? If you look at the gap of approval rates of regular e-commerce transactions and crypto transactions, the question here becomes, how can our customers make the best out of this growth, right? While mitigating the risk involved with it. Definitely. Yeah.
So, if we can stay a little bit on this risk which is associated with crypto purchases, and I think that I wanted to subdivide the question between Shahin and Jean, yes? So, Jean, you mentioned that issuers are being extremely averse. I mean, you mentioned rates 45–50%, which is really, really high. Can you maybe explain a little bit more? What are some of the key challenges the acquirers and the crypto issuers have regarding the crypto, even though, it's such a big opportunity. And yesterday, Kamran and Ashok excited us so big time around, DeFi and everything around it. So you are telling us that there's obviously such a big decline and lack of appetite.
Correct.
What are key challenges?
Definitely. So, I mean, when we say these things, of course, it's approved a lot less. We totally understand, right? It's growing super fast, and there's a lot of unknown. And I think there's three main challenges, right? Our customers are struggling with today. Number one, and the biggest one, is lack of visibility, right? Our customers, acquirers or issuers, right? Acquirers, when they onboard, if they need to onboard an exchange, or issuers when they get transactions, they lack the full visibility on into all crypto volume that their cardholders are undertaking. So they don't know the full volume. And number two, they lack the visibility on these exchanges, right? The risk level of these exchanges. How should I treat this exchange? Right? If I have no insight about the risk level or the transactions that these exchanges are usually are facilitating, then it becomes very difficult to make that decision of approving or declining a transaction. So lack of visibility is I think the biggest challenge
Number one.
our customers are having. Number one. Number two is compliance. Always there's a compliance aspect because of the growing popularity of cryptocurrency, right? In the global, regional, in every market regulatory sort of environment, new compliance requirements come up. Right? So issuers think they may be out of compliance with key regulations without full knowledge of their full exposure, right? The policies change every day. So they risk getting fines and or they risk being involved with some illicit activity or financing terrorist organizations without knowing that it's happening. So there's always a compliance problem. And number three is the exposure to fraud. Right. I mean, fraud is bad. Everybody agrees fraud is bad. It's reputational risk. So the issuers think they might be exposing them to higher fraud losses. Again, it comes to lack of understanding of full exposure.
Amazing. So you mentioned these three, obviously, the visibility, the non-compliance, and the fraud. Shahin, in the beginning, you talked, you mentioned dark web, and obviously that hangs over everybody's. Do you want to elaborate on this question and give us some of your point of view around the challenges which the issuers are facing right now?
Yeah, definitely. I mean, I think that's really interesting because let's face it, cryptocurrency was popularized by us all finding out about the Silk Road and this kind of mystical world that was behind computer screens. But I think just kind of building on from what Jan has said is that actually transparency is really key in understanding your data. And actually of the kind of 1,200 VASPs that exist globally, and accept credit and debit cards, many are actually misclassified. So they're holding incorrect MCC codes. So a lot of the conversations that we have is that actually people don't know the VASPs that they're interacting with, VASP being virtual asset service provider, or for example, exchanges like a Bitcoin or a Bitstamp. And so what that means is that, for example, in some countries, organizations or governments have a zero crypto policy. And actually, looking through the data, there's still a little bit that's trickling through. I think what's then kind of adding further complexity is, as Jan said, is around kind of new regulations coming out. So we actually have the Financial Action Task Force is implementing a travel rule, which is going to be similar to what we have currently for SWIFT, which is that above certain transaction kind of values, we're going to have to attach certain PII information. Ultimately, that's going to add more friction to the customer transaction journey, and something that actually we need to see kind of financial institutions having kind of automated or some sort of technology to help them be compliant, but reduce that friction to customers. Similarly, to give an example, with the OFAC list updates, we're seeing that become more rapid. Only last week, if you're familiar with Lazarus Group, so it's the nation state hacker group from North Korea, OFAC actually updated some of the details for that group twice just in 1 week. So I think that there's these two areas around transparency, around these kind of rapidly evolving regulations. But something, you know, further adding off what Jan has said, is that actually a lot of this is around business intelligence. And yes, there is the anti-money laundering aspect of maintaining that you're compliant, but actually visibility and understanding your data is power, because understanding where your customers are choosing to put their dollar amounts actually gives you a lot of insight into your strategy going forward. And therefore actually being blind to that gives you less opportunity to really understand your business and therefore decide, say, where you want to take that.
Amazing. I really like it. And, you know, I think you mentioned now almost like 5 areas, right? The lack of visibility, the non-compliance, the fraud, the business intelligence, and ultimately the understanding of the data. So can I stay with you, Shahin, for one more time? And so if you think about this category of all the challenges, yes, how does CipherTrace actually come into the pictures? How can CipherTrace mitigate this risk for the issuing parties?
Sure. So CipherTrace delivers cryptocurrency, AML, and counter-terrorist financing, blockchain forensics, and ultimately regulatory monitoring solutions that make crypto assets safe. At the heart of these solutions is globally shared crypto intelligence and a massive curated pool of high quality blockchain attribution information covering more than 800 tokens. On top of that, we supply 20 million unique pieces of trusted data to the pool each month. So this very special curated pool is collected by our attributions team, and this comes into 4 different products, which help to measure your third-party exposure to, say, virtual asset service providers, but then also provide automated intelligence to make sure that transactions that are being sent are complying with the traveler rule from FATF, but also not being exposed to any sanctions either.
Interesting. So I know that you will show us the demo, but before we go into that exciting piece, Kamran, you know, how does this link into the crypto cards? Can you, how can the tool like CipherTrace enable safe payments with crypto cards? I think you're on mute. If you can unmute yourself, Kamran, we would love to hear what you have to say.
Okay, there we go. Sorry. So what's really interesting about this, and I think Shahin and Jan have covered that very well. One of the things that I think we've all come to realize over the last 3-4 years is that people will be attracted to crypto for a variety of reasons. We've discussed 2 big draws of that, non-fungible tokens and DeFi over the last 2 days. And we know that although there have been a lot of efforts to outright ban crypto activities, the simple fact is crypto activities, it's impossible to enforce those bans, right? So if consumers are going to demand these sorts of services, then coming up with safe, compliant, legitimized versions of these services that offer the same benefits, I think becomes an imperative, right? Crypto cards are one.
Correct.
Up until now, I think the discussion has been focused on treating while virtual asset service providers as payment recipients, right? Now, let's discuss what happens when banks actually treat them as partners, right? Which is really where the CryptoCard program starts coming into play. The CryptoCard program, for those who are unaware on the call, is basically a program that enables you to obtain a Mastercard that is tied to your crypto holdings, and it enables a whole host of transactions on the card network via crypto. In a nutshell, it enables consumers to pay with crypto and merchants to get paid in regular fiat currency, following the normal card transaction rails. And all of the things that you get on the card network in terms of the card flows, the ability to claim refunds, file disputes, et cetera, all of those things actually come into play over here. So it's a very compliant and safe way for people to utilize their crypto. They can go ahead and cash their crypto out. They can go ahead and quickly convert their crypto into fiat currency and top up their cards. They can get rewarded in crypto, right? So there's a lot of interesting things happening over there. Now, for a bank to actually meet consumer demand and start offering some of these services, they require partnerships with crypto players, crypto wallet providers, and crypto custodians and crypto exchanges. And they need to mitigate, any potential risks associated with it. Now, there in a very specific context is where CipherTrace becomes, in my view, indispensable, right? So first of all, as a bank, if you're selecting which crypto player am I going to go ahead and partner with, right? There are over, as Shaban mentioned, I think around about 1,200 crypto players, probably even more out there at the moment, right? I would say that there is now a curated group of crypto players. The situation is very different from what it was 4 years ago. There are crypto players right now that are credible, well-established, licensed, even working with regulators, working with entities such as Mastercard, and partnering with those crypto players is a very different proposition from partnering with XYZ crypto exchange that nobody's ever heard of. Right. So as you're scrutinizing this, one of the very important, I think, factors to take into account for your decision, is this a crypto exchange I want to partner with or not, is, I believe, the rating system that comes with CipherTrace. I think Shaban will talk a little bit about that probably later on, but basically, how good is a crypto exchange in terms of its KYC procedures, in terms of past exposure to potential illicit activities, that becomes a very important piece of input when you're establishing peace of mind as a bank. Do I want to go ahead and partner with this entity? Then secondly, when I want to take a card and associate it with a crypto wallet or with a set of crypto wallets, the question comes up, how clean are the funds that are sitting in those crypto wallets, right? Have those funds passed through, shall we say, shady hands on their way to that wallet? What has been the source of those funds? Were they cleanly acquired, freshly minted currency, or has it come through wallets that are known to be associated with illicit activities? You want that sense of risk. So again, that's somewhere where CipherTrace can provide kind of like a risk score before, when you're taking a decision whether or not to grant the card against a particular wallet or a set of wallets, it comes into play over there. And then crypto moves in and out of wallets all the time. So while a wallet may be clean initially, it may over time, that situation could change. So you want to be able to do that periodically, perhaps even on every single transaction, maybe calculate a risk score. And again, CipherTrace at runtime can provide a set of services that can plug into card flows and enable you to do a quick risk scoring on a transaction before you allow that transaction to go through. Like that, and that is just scratching the surface of the kind of CipherTrace can enable in terms of safety when it comes to these things. It is extremely important because, we often talk about, we hear from, there will always be this segment of the population that are crypto fundamentalists, so to speak. So anything that is not pure crypto for them is taboo. But for the majority of us who are crypto enthusiasts, we don't really care so much about anonymity. We don't really care so much about going through KYC and having to comply with compliance. We care about all the benefits that crypto will bring to us. So if you give me a crypto card, for me, that's a godsend, right? As a crypto enthusiast, an easy way to cash out versus what I have to go through currently. And introducing things like this and enabling things like this, I think, will automatically address a lot of the concerns that regulators and compliance departments within banks have. CipherTrace, in my view, is a key enabler of this. It completely busts the myth, in my view, that crypto is opaque. It is not. It is very, very transparent. What's been missing is something to organize all of that data in a digestible way and usable way. And I think that's what CipherTrace brings to the table.
Yeah, I think yesterday we used the metaphor, between the decentralized finance to democratized finance. And while you were talking, what came to my head was, this almost is like a doctor, right? Which looks at all your health data and tells you, what's going on in your body. So CipherTrace is almost like Dr. CipherTrace, right? Which enables you to make the right choices. So Shahin, with all these examples which Kamran was saying, how about if you could put it to some more real life use cases, for CipherTrace, perhaps with some success stories with customers, so that the audience, get a glimpse what's possible.
Yeah, sure. I think, Kamran, yeah, I love what you said. I think it's funny because I think that the proximity to things like the dark web means that people think, oh no, we don't want transactions going on blockchain. And actually, just as Andrea said right at the beginning, there's a lot of beauty to the blockchain and the fact that actually, unlike traditional payments where it's actually it's relatively easy to manipulate the transactions to obfuscate the ultimate beneficiary. Actually, by buying and selling crypto, it's like putting a financial tattoo and stamping that down. And so it's been fascinating because, our chief revenue officer, he's been advising, for example, the US government. And one of the guys was like, do I really want this blockchain stuff? Do I really want this cryptocurrency stuff? And he said, yeah, he said, if someone's gone and laundered money, you better hope that they've done it with crypto because we can definitely trace it. So, and to that point, so CipherTrace, I mean, we have a lot of really fantastic tools, but we also have actually a financial crimes investigation team. And a lot of inbound inquiries that we have are actually people saying we've been scammed out of our life savings, which is, it's quite sad to see. But actually, in several cases, our financial crimes investigation teams have been able to go in, recover these funds and found where they've been distributed. But not just that, they've actually been able to stand up in court with that evidence and stand behind it. And actually, as a data service provider and software provider, we're very unique in that respect, in the fact that there aren't actually a lot of organizations that are willing to stand up in court and really represent that data. But kind of moving,
example, do you have a real example with a customer which you could share, and what was the impact through the partnership which they had CipherTrace?
So I can't talk necessarily about any specific examples, but definitely what I can show you in a demonstration of the product later is really that kind of like traceability, particularly with kind of terrorist, for example, terrorist financing, where we've been able to see, say, funds being collated and then cashed out, or even having funds going into particular bank accounts that terrorists can then use. So I can show you that's the type of tool that our financial crimes investigators would be using.
Okay, I think you got everybody now super excited. So it's probably time to get into the demo. So I think everybody would just love to see the demonstration right now of CipherTrace to get the visibility on how what you can track and how our risk level of exchanges cardholders are engaging with, and also track coin transfer to a terrorist organization. So can you show us? Can you do it for us?
Yeah, I can show you. So okay. I'll just share my screen. Just give me 2 seconds. Cool. So
this is a little bit like a Minority Report, right?
It's not
yeah, I mean, I feel like that. I feel like that when I turn up to work every day, so it's pretty good.
Love it. Okay, take it away.
So yeah, so this is an overview of the dashboard where you're really able to get an idea of, so this is our Armada product, where you're able to understand kind of that risk that you're seeing with counterparty risk with different exchanges. So this kind of gives you an overview with these up here are kind of your top exchanges. We also have, reports that come in. And we also have recent KYC changes. So, you know, when I was talking about the attributions team previously, one of the things that we do to actually check the KYC score is we actually open multiple accounts on quite a regular cadence to see how those have changed. We also have other changes, such as, you know, regularly exchanges will change, for example, where they're where they're domiciled. And so we're keeping track of kind of all of these different metrics across these 1,200 VASPs. So what I'll do is I'll hop into someone who most people know. So we can hop into Coinbase here. Oh, whoops. One second. Here we go. So we'll just hop into Coinbase.
You know, while you're hopping, I was seeing that there is a Czech Republic with a red flag, and I'm Czech, and I'm so disappointed that, you know, we're such a small country. We made it on your list with a red flag.
And there's a
Cool.
quick question, Shahin, if you want.
Oh, yeah,
Somebody's asking, what is a VASP? So do you want?
That's a great question. So one thing that definitely in the cryptocurrency world is there's a lot of acronyms. So a VASP stands for a virtual asset service provider. So that could be anyone from an exchange like Coinbase. So for example, you or I could go with our credit card or use our bank account to buy cryptocurrency through this exchange. Or alternatively, you have, for example, ATMs. So you go to kind of a physical kiosk where you can go and buy cryptocurrency directly there. So yeah, so stop me at any time if there are any other acronyms that come up, but I'll make sure to explain them.
We will definitely watch the chat, let you go through the presentation, and then we have time for questions in the end.
Yeah, sure. So this is an overview of Coinbase, who are very well known. By asset size, they would be one of kind of the largest banks actually globally, which I find a really fascinating fact. And what we can see is actually there's a huge amount of information here. One of the most important indicators is the green KYC. And what we can see here is actually kind of a chronology of all of these status changes over time that they have actually been monitored by the system. What we can also see is the amount that's actually been coming in, which is high risk. So we can see here, actually, that's a very low amount of money. But then equally, we can see the amount of money that is actually coming out, and the top kind of received institutions that USD is coming from, and then also where that is being sent to. What's particularly interesting about Coinbase is if we click here, is actually the number of different bank accounts that they are registered with. So these particular bank accounts would be used, for example, to take in direct bank transfers in order to buy cryptocurrency. Whereas here we can see that they have 17 different accounts that they are linked to globally in order to take credit or debit transfers in order to take cryptocurrency as well. What's then interesting here is just in terms of crypto assets. So what we've actually been finding recently is that we've actually released a recent ransomware attack is that report is that with a lot of cybercrime, a lot of the payment is taken in cryptocurrency, but we're seeing a very big migration from Bitcoin payments over to things called privacy coins or something called Monero, where essentially you're able to entirely obfuscate the payee and ultimately the beneficiary. And so what we find is that for these exchanges that actually take these privacy coins, there is actually a slightly higher risk that is associated with them. Another factor to take in is kind of, are they able to accept fiat? Fiat being kind of, you know, your US dollar, your euro, the currency that you're using actually to directly purchase cryptocurrency. We then have these terms called on-ramping and off-ramping, which is effectively buying crypto or selling your crypto and cashing out. So we have options of direct on-ramping. So this is where you're directly going to the exchange and actually buying, you know, directly with that exchange, the cryptocurrency. But then also what we're seeing is that actually there's a lot of other organizations, for example, PayPal, that allow for you to indirectly buy crypto through an exchange. Ultimately, you know, a lot of people, they'll want to maybe cash out at some point, and so that ability to be able to off-ramp also plays in as a certain kind of risk indicator, essentially. So Coinbase, it's a pretty, you know, it's a very, very reputable organization. It's in the top 5 globally in terms of actual risk. I think what's really fascinating is actually, if you look at the compliance of a lot of these exchanges, there was a recent report that came out that actually showed that, you know, outside of the top 5, a lot of these exchanges you really need to watch out for. And so if you consider that there are 1,200 virtual asset service providers, there's a lot for you to kind of make sure that you're monitoring and you're staying on top of. So I'm now going to show you another one. So this is one called Bitinca. So Bitinca is based in Peru, and Peru actually doesn't have as much kind of crypto regulations as other places that we've seen in the world. And what's particularly interesting here is that whilst they're receiving some quite low risk transactions, actually we're seeing that a lot of the funds are actually being sent to high risk exchanges. So we can hop afterwards into our tool inspector to kind of have a look at some of these transactions and where they're going. But I think what's particularly interesting here is that if we look at all of the bank accounts, they have about 17 different bank accounts that seem to be spread across Latin America. So actually, it's all of these data points that our attributions team are aggregating and bringing together that are able to give you a really good idea of which exchanges are particularly risky, but equally being able to show you kind of your exposure. Definitely something to note is, you know, with working with some of the banks, of which we worked with one investment bank in 2021, we actually found that in the first 6 months of that year, there were about 12 billion crypto fund transfers to virtual asset service providers that they weren't aware of. And it's a tool like Armada that allows you to have that idea of actually how many transactions are being you know, exposed to crypto, and giving you that business intelligence that we spoke about earlier.
Right, that's a really great example. Thank you for bringing it alive with that bank.
Sure. So I think the next one that I just want to show is Inspector. So we're just going to go in here. So Inspector is our kind of transaction tracing tool. So previously when we talked about, you know, Minority Report, or being able to kind of see exactly what people are doing, this is the tool really that a lot of our financial crime investigators use. So I've got the address here, which is going to show us a sanctioned entity. What you can see is that a lot of the times these transaction codes or addresses, they're very unique, and therefore, you know, we're able to automatically complete it within our search bar. So if we hop in here, we trace the transaction, and what we can see here is that this address is linked to a sanctioned entity, and the country that they're linked to is actually Russia. We also have these cluster IDs, which are able to show you kind of multiple addresses that are actually maybe linked to that particular sanctioned entity, because actually a lot of the time we can find that they have multiple different addresses to which they're, you know, transferring and, you know, making payments. So what we'll do is we'll hop into this particular transaction here. So it's a bit bamboozling. We've got a lot of kind of inputs over here, and what I'll do is I'll combine the clusters. And what we can see here is that we've got 462 actual different accounts. So if I zoom out here, these are all of these different accounts where ultimately funds will be being held in all of these different criminal accounts. And then what we're able to see is that actually they all come together to make one transfer of, you know, 4.27 Bitcoin to this particular address, but then also they later kind of make another kind of transfer to another Bitcoin address. We can also see the tagged IP addresses. So for example, the tagged IP address would be UAE and Iran here. So this is once again adding to kind of our rich pool of data. And then what we're able to do here is we're able to expand 5 steps forward. So if we actually look at the trace of these flows, they're all aggregated into this particular private wallet, which gives you a certain amount of anonymity because there aren't any KYC checks around that particular private wallet. But if we kind of trace further down, so another private wallet that the money is sent to, and then another transaction here, and actually at the end here, we can see that there is an exchange. So Bitfinex that's at the end of this chain. That's an exchange, as we can see in our legend over here. And so what we're actually viewing directly is a sanctioned entity pooling together their funds from multiple different criminal accounts and then actually sending them through different private wallets, attempting to obfuscate that money, but then ultimately sending it into an exchange to go and actually cash that out. And what we can see further down here is that actually that money has then further been tried to be obfuscated through private wallets and actually has ended up here in a dark market, potentially buying or probably buying some kind of illicit goods. So I think overall what we're just trying to show here is that actually, you know, blockchain and cryptocurrency, it's incredible, the transparency and that tool for compliance teams, and actually having that you know, the right data, the right software will give you that transparency, not just to be better compliant, but equally to understand that business intelligence so that you can make the most of this new technology rather than being left on the blind side.
I think it's really great, you know, that you show it in that way, because if you think about the traditional banking sector, right, and you would obviously try to wash the money in or send the money in the same way to multiple different accounts, it's impossible to map it in this way. So I would go back into that's why, you know, blockchain is so beautiful, because it is so incredibly transparent. In traditional way of me sending money from Czech Republic, Switzerland, Romania, you would never be able in such a speed to trace it and to be able to say who are the participants in the transaction.
Yeah. I mean, and Kamran, you know, made an amazing point earlier, which is that, you know, we've just been waiting for these visualization tools and, you know, and they're here for people to be able to leverage.
Shaban, there's a question inside, what is the data source for this analysis?
So, yeah, so that's a really great question. So what we find is that the blockchain, so for example, with Bitcoin or Ethereum, these are actually stored on public ledgers. And so a lot of these transactions. So the key for us really is taking in kind of like that transaction data from those public ledgers, but then really what the USP of CipherTrace is not just that visualization, but is effectively that attribution that we're able to link around it. And so actually we have I'll show the screen again. We have our attributions team that actually, you know, they're taking in this KYC data. There's about, you know, there's over kind of 50 people globally that are taking in this information in order to identify actually, you know, do we have a criminal account here, or alternatively, you know, what sites are dark markets, how are these being updated? And we're adding about 20 million pieces of data to kind of like these attributes and 1,200 VASPs per month. So,
yeah, I think that what for the audience and for some of the members who maybe want to visualize it and experience it privately, the easiest way is to look at even not to even buy, but to go into OpenSea and click on an NFT and then go into the network and actually see all the details of the transaction, who minted first, where did it go, from which wallet it was paid. I think you actually don't need to be a participant in the ecosystem, but you go on any of these networks today, select the artwork you like, and go into the details of the transaction itself, and you can see everything and everybody from any point what happened to that NFT. I can see that there is some more question. Is this data available for public or needs a special engagement? Shahin, could you want to take that?
So yeah, so that's a great question. So as I mentioned previously, so the collection and aggregation of this data is really kind of the USP of CipherTrace. We can confidently say we're the only, or one of the only companies that can both kind of present our findings and our data in court and then also stand up against it. So yeah, I would say that if you're interested in a tool like this, you're very welcome to come and talk to us. Equally, we also run training programs, which, you know, you're also very welcome. We're happy to share the details with you. The amazing thing about the training courses is actually the fact that it's teaching blockchain by, I mean, these guys, they've been in blockchain for like 8 years. So they really know their stuff. It's a bit different to say getting kind of like, you know, your blockchain, say lesson from somewhere else, because these guys really are the experts. So yeah,
if the audience would be interested in these trainings, do they just need to go on to your website, or what is the process you recommend? Or can we share in the chat some of the links where
yeah, sure. Yeah, I can. Yeah, so I'll grab the link and I'll put it in the chat before the end of the.
Amazing.
Yeah.
Jan, you know, I'm sure that in many people in the audience is now, you know, they're asking themselves, so what does it mean for me? You know, how can I use it for my organization? Can you take that? What would you recommend?
Sure. So I think, Andrea, the first, I think every organization, people are probably asking after this session now to themselves, but this is very important to ask themselves a question. Do we have full visibility of our exposure to crypto transactions? Do we fully understand how much is being transacted? Do we know how much our customers are exposed? What are they exposed, meaning how much are they buying and selling or doing transactions with crypto? Why are they doing this, right? Are they sending money back home? Because based on if you fully understand the outgoing, incoming amount, you can to some extent know what they're doing with crypto, right? Are they investing in it? Are they sending money back home? Or is there some illegal stuff within that old volume, right? Are they exposed to any risk? Are they interacting with maybe exchanges like Shahin mentioned, not the top 5, but the bad ones, right? And maybe unknowingly, right? So those are the questions that they should ask themselves. If they don't have the answers to those questions, I think the first step should be to get a very good understanding of this, right? Because then we all agree, and in the past few days, right? This is here to stay. This is growing super fast, right? Every issuer every bank will have to develop their strategy on crypto and digital currencies. We believe a visibility first approach makes sense with crypto. The first step should be to build that business intelligence around the organization's exposure, understand what's happening, and then decide, how do I get more competitive advantage in this space, right? How do I make the best out of this? Like Shahin mentioned, also to relate to that last question, right? You might trace things because blockchain is public, right? Everything is there. But what you will be missing is the amount of work like companies like CipherTrace put in terms of the risk level of every entity, right? Or collecting the sanctioned entities, collecting the wallet addresses of terrorist organizations because they just publish it on Twitter or something, right? So with all this intelligence aggregated, combined with the blockchain data, gives you that full visibility, right? I think the first step to summarize is to figure out if the organizations have full understanding of the exposure, and if not, try and do that first, and then develop the strategies around it, be it launching a crypto card or loyalty program, whatever it is.
Yeah. In the absence of the launch of a crypto card, I'm just thinking about example. So let's say I am in as a consumer, I have cards from 2 different banks here in UAE. And obviously buying the crypto from crypto.com and putting it into a MetaMask from Coinbase and so on. So if I as a bank would obviously have CipherTrace, on one side I would see all the different exchanges and obviously the the data around it. What does it mean? What would I know about somebody like Andrea? So because obviously today I just see that Andrea did the card transactions, right, in a fiat currency, buying something on an exchange. What does it mean? Knowledge I would have about my consumers inside my bank.
So I'll give it a shot, Shahin, add if I'm missing anything. So from an issue perspective, the understanding you would get via a tool like CipherTrace would be through any channel, card. It doesn't have to be only card transactions, right? A lot of people transfer money to exchanges. So in any channel, by any means, how much of a Conzero mine, Andrea, right? How much through these channels Andrea is investing or sending money or buying crypto exchanges, right? What is Andrea's exposure to crypto, and which endpoints she is interacting with? What are these exchanges? And let's say 5 exchanges. What is the risk level of these exchanges? Right? Do they have proper KYC processes? Do they how much of the exchange's traffic is illegal or criminal? Right? How many other users do I have, like Andrea? Right? What is the total sum? And how should I treat this? If I decline Andrea for a Coinbase transaction, which seems to be super safe, if I continuously decline Andrea, I think I'm going to see Andrea's transactions stop at some point, right? Because she's going to give up and she's probably going to use another bank, right? So what's the best strategy here? Of course, mitigating risk and reward always for the future of lifetime value of my customers. This is the insight. I think intelligence CipherTrace would provide the banks to make better informed decisions. And if you have to trace do some minority report stuff, of course they can always do that too.
But I really love this, of a notion we are almost like ending up with, because that happened to me in reality. Kamran knows very well that I was trying one card so badly, and then I just, left it and I moved to a different card because it didn't allow me to buy any crypto, and it was constantly declining. Even though I was speaking to the bank, I said, please don't decline my transaction. It's me, it's legit. So this is and I really like it because he's bringing it down into the reality, of what does it mean for an issuer. I actually can lose customers at this point in time. In this, where customers are really curious, and sometimes they don't buy big amounts, but they want to test things out. They want to go into different wallets. And the moment I'm so averse, I don't understand who are the customers, what they're doing, I can actually lose them to a competitor. So there's also a question, crypto card program is still not approved by the regulators. Do we have a list where it is approved? I think that's more to Kamran.
So the crypto card program, we have several of these launched globally. And we have a lot of conversations in advanced stages within the region. And we are engaging the regulators on this as well. Before we go ahead and launch one of these programs, there's always an approval process that we go through. And a regulatory scan and regulatory approval is part of that. And one of the key things that basically enables the regulators to go ahead and approve something like this is exactly what we've been talking about, I think, throughout this entire thing. This is a much better way to bring visibility into it. In the case of the Middle East, that was the follow-up question. We haven't launched a card over here yet, but as I said, we're in advanced stages of actually going ahead and doing that. The regulatory approval is the final step, and the conversations we're having are actually quite positive. So we're hopeful that we will start to see some of these cards come online here as well. The regulatory countries which have the greatest amount of, let's say, friendliness towards this concept, obviously, we would start with the countries where there are licensing regimes of some sort available for crypto exchanges. So UAE, for example, has a licensing regime. Abu Dhabi Global Markets was previously assigning licenses. And then afterwards, this new body has been established as well. So working with a local properly licensed crypto exchange that has regulatory reporting requirements, that makes the UAE a good candidate for this. Bahrain in the region is another one where the central bank directly assigns crypto trading licenses to the crypto exchanges operating over there. So those are the two countries which I would say are a little bit ahead of the others when it comes to the GCC. But we're receiving several inquiries for discussions across the other GCC countries as well.
That's interesting. And there is one question which popped up in the Q&A. Which says, in the future, is it possible to quantify the level of decentralization and economic incentivization? And the person who is asking, say, what I mean is, what are the opportunities for public sector? I think, Kamran, that also goes a little bit into your.
Sorry,
so,
I think we'll need to take another look at that question.
Okay, can you look into the Q&A?
Yeah, absolutely, absolutely. I think this is probably going to be a little bit further up, possibly. Andrea, if you could just read that out again very quickly.
Okay, in the future, is it possible to quantify the level of decentralization and economic incentivization? Who is the beneficiary in the decentralized, and are there opportunities for the public sector?
So that is a tougher question to answer or to give a short answer to. What I can tell you guys is that we've had a lot of conversations, very interesting conversations with some of the central banks in the region, where some very interesting things have come up related to decentralization, not just with payments. I've had conversations with central banks where they've actually workshopped the concept of using DAOs, decentralized autonomous organizations, that concept, to allow citizens to vote on certain aspects of policy, right? I've had conversations where central banks, which are considering launching their own central bank digital currencies, which we'll discuss in more detail tomorrow, they've been talking about the potential of taking those central bank digital currencies and deploying them in DeFi pools and other chains to give their citizens a new way to earn, right? And as you guys have seen, everything on the blockchain is very, very traceable. So establishing some sort of metrics around it in terms of how much money is tied up where and how does it compare, I would say the answer to how much money is tied up on the blockchain side of things, you'll get an exact answer. When you want to compare it with how much money is tied up in a traditional banking sector, good luck. You're going to have to do a little bit of digging over there. Yesterday, we showed in the DeFi section, we showed, and I shared a link with everybody, you can see exactly how much money down to the cent in US dollars is tied up in all DeFi pools at this very minute, right? Yeah. So you get that kind of visibility. And then if you have your non-blockchain data with you, yes, you can absolutely make that thing as well.
Wonderful. I think one more question on the chat. Exactly. Does Mastercard do KYC on VASP, or do we use the regulator's green light to give green light to VASP on CyberTrace? Who is taking the KYC risk?
I can take it.
I think, Shahin, if you can take it.
Yeah, we do not do the KYC for VASPs. Regulators giving green light, checking CipherTrace would be amazing for us. I mean, we hope that they trust us as much, or we do talk to regulators in this sense. But it could happen, but I don't think it's a let's say formalized process as of yet.
Amazing.
But yeah.
So
I have the last question.
I'd just like to add a little bit to that, right? So that's in general with VASPs in terms of CipherTrace ratings, right? I suspect the question might be a little bit more towards crypto cards and merchants, right? So when one of our acquirers is onboarding a crypto player as a merchant, for example, or when we are working with the bank and working with the crypto exchange to partner with the crypto exchange for a crypto card, then yes, as part of both approval processes, we do scrutinize that exchange. We scrutinize it in terms of sanctions. We scrutinize it in terms of the KYC procedures. So when we just announced Coinbase as a Mastercard acquirer for their upcoming NFT marketplace, that was after a whole lot of due diligence that was done, the same as we would for any other merchant.
Yes, we have 3 minutes to go, and we have one more question inside. How can we get more documents on the workflow of transaction crypto to fiat?
Okay, so that would be on there's multiple connotations over there, right? So the kinds of transactions that we can potentially talk about as Mastercard are the kinds of transaction flows that occur in the context of crypto cards, right? So we have material which is available on our crypto card program. I think if you can approach the Mastercard team, you can approach me after the call. That would be something I would be happy to do a separate session on.
Wonderful.
And to share.
Amazing. So my last question is to, obviously now we have questions coming and we have 2 minutes to go. Shahin, I'm trying to access the link, but it's giving me a forbidden note. Is it due to region access? If you can just respond maybe in the chat to that. Jean, my last question to you is now, if anybody in the audience is really interested to get engaged with us and explore CyberTrace with Mastercard, what do you recommend them to do?
They can reach out to myself or Shahin, right? Either of us, and we'll do our best to help you get on a call, explain further, maybe play around with Armada a bit together. But yeah, definitely. And then in terms of cipher trace and overall risk, of course, for bigger conversations, we'll also involve the relevant parties like Kamran or other people in Mastercard. Yeah.
Incredible. So this was really amazing. We had a little bit of movie insight, I think, inspector and tracing of transactions. Thank you so much, Shahin, Jean, and Kamran. Big thank you to the audience for joining us today, for all the incredible questions and reaction in the chat. Before I say goodbye, allow me to remind you that tomorrow is our last day, and we will be deep diving and unpacking the digital central bank digital currencies. And I hope that we will see you tomorrow in our last session with Kamran. Thank you very much for joining us today. Thank you, Shahin. Thank you, Jean, and thank you, Kamran. And have a lovely day.
Thank you.
Thanks.
Thank you. Thank you, everyone.